Hi everybody, this is Todd with the Forex Nitty Gritty Insiders Daily video. We're right smack in the middle of the week here, guys, looking at a market that is still somewhat trying to decide what it wants to do with itself. Obviously, the same issues that we've been dealing with seem to be there with Europe and the debt issues. And we're waiting on the markets, the U.S. markets here to open. Looks like set for at least a little bit of a positive open, looking at the pre-market numbers here, although not necessarily a huge movement to the upside, but certainly positive. And we see a couple of interesting things, and I'm going to just talk about one of them here. Give me 1 second here. That is probably an interest to most people, and that is the trade balance here in both Canada and the U.S. And you can see the difference here. Now, when we talk about trade balance, we talk about the difference in the value between the imports and the exports for that previous month. And so if it's positive, that means there's more exports than there is imports and vice versa. Well, in Canada, it's a negative 0.8 billion. In the U.S., it's a negative 48.7 billion. So pretty substantial. Now it's down from last month, which was at 50.6, but still pretty big deficit there when it comes to imports versus exports. So that might have a little bit of impact on what's going on. We also have today the FOMC meeting minutes, which usually comes after the announcement of the FOMC by about 3 weeks, and kind of gives a little bit of the details of that most recent meeting. And so the market will be looking at that. Usually not a big impact because it's not a reported number. It's just a report on the numbers that are coming out. Then Australia, we've got some employment numbers coming out tonight, and also in Japan, there's a scheduled policy statement from the Bank of Japan and their interest rates. So maybe a little bit of a more busy day today as we go through, so we might see some choppiness. Now, let's take a look at what's happening on the hourly charts of some of these pairs here, and just to talk about one thing today, and that is being able to identify support and resistance. And sometimes as we look at drawing our lines, we talk about support and resistance as areas where the price in the past has had a difficult time moving beyond. Now, the difficult thing is when we look at support or resistance, we really want to have several things that we're looking at, and one of them is we want to have multiple areas that have been held as either the resistance point or the support level. When we get levels like this, sometimes these levels are more of just looking at swing highs or swing lows as opposed to true long-term support or resistance. Now you can see here, and I'm going to put a vertical line each time we had it come down to this level. So in this case, you can see we had 1, 2, 3, 4, 5 times it came down to this support level before it bounced up. So that's an area where we can see some pretty good support. Now down here we have maybe 2 areas. Here we have maybe 2 areas. Here we have 1, 2, again 5 different areas here where it's held. Here we basically have 1 area. So as we look at the difference here, we want to take into consideration the number of times it's actually gone down and touched that area, so that we know and can tell the strength of that support or that resistance area. If it's just a swing high or swing low, then we're not going to consider that as strong of an area for support or resistance to be held. Now, the other thing that we want to look at is not only how many times, but the distance between the times that it occurs. If it occurs all one right after the other, it may be less strong than if we see it happening, over the entire time. So if over this entire time, the resistance point was held in between swing lows or swing highs, then that becomes a little bit more significant because it's been able to take some time to retrace from it and then come back up and test it. So these areas where we have like this, even though we have multiple touches, they're not really distinguished between the support areas or the swing highs or the swing lows. So we'd like to see a little bit longer term, more times where it comes off of that and is really testing it strongly to say that we've got some strong support or resistance. So take that into consideration as you identify those areas, and keep an eye on the market, watch for the volatility, keep your risk in check, and we'll be back tomorrow to take a look at the markets and how they respond going into the end of the week. So until then, have a great day, and we'll talk to you soon.